Hey guys, it's time to make a video about the Fibonacci trading tool, and in this video I will be sharing with you how you can measure both the corrective and impulsive leg, and I will also show you how you can use the Fibonacci tool to get your take profit. So before we start with the video, I would like to give a special shout out to our sponsor. So we have partnered with XM. XM is giving free $30 to their new clients, and they're also giving up to 5,000 on your deposit. You can also trade 24/7 on crypto, and you also get access to 1,000 trading instruments. So going back to our video, for you, in order to be able to use the Fibonacci tool accurately, you need to understand structure. So without structure, you won't be able to get the correct structure. So you need to mark the correct structure so that you can mark the correct areas. So we know that in an uptrend, we're gonna have an impulse, correction impulse, which is your ICI. And then when you want to measure the correction, if you are in an uptrend, you're going to be measuring from the low to the high to get information about the correction. However, if you want to get the information about the impulsive leg, you're going to measure from this zone to this high. You're going to measure this leg like this, reverse Fibonacci to get this leg. So let me show you with the Fibonacci tool how to do that. Let's do it. We are having an impulsive leg, and then we know that to get the information of the impulsive leg, we mark the swing low and the swing high, or simply the low to the high. So let's do that. We mark the low and the high, and we're going to get the information of our corrective leg. We can also see that we are having different levels here. We are having the 78.6% and 61.8% in red. So this is the golden zone. Price is most likely to come and mitigate the zone. That's why it is in red. And then this zone is my extended Fibonacci target. This is my take profit. So I'm gonna allow you to pause the video, copy the settings so that you can have the same settings as mine. So these two reds are your golden zone, and this one is your take profit 2. And then 0 will be your take profit 1, and then the minus 0.61.8 will be your take profit 3. So let's go back to our video. So you want to trade from the Fibonacci level, which aligns perfectly with structure. So if the 38.2% aligns perfectly with structure, this will be a good zone to look for buying opportunities. And then in most cases, price will like to tap below the 50% or equilibrium before giving an impulsive move to the upside. And then when price taps into the golden zone, you definitely wanna take the next impulsive leg to the upside. So how do we get the information of the impulsive leg? So let me show you. You're going to mark from this low to this high to get the information of your next impulsive leg. It's gonna give you a Fibonacci extended target, which will be your take profit. So let's use the Fibonacci tool again. You're going to mark from here to here to get your Fibonacci target. You know that 0 will be your take profit 1, and then the minus 0.272 will be your take profit 2. And then your take profit 3 will be in this zone, the minus 0.61.8. You do not need to hold all the way to both Fibonacci extended levels. You need a minimum risk to reward of 1:3. However, if you want to hold your trades longer, this will be potential exit levels. So suppose you go to trade from the zone and you can get a 1:3 from 0, you won't need to be extending your target. So if you're using tight stop losses, it's gonna be much easier to catch 1:3. But if you wanna have a safe stop loss, you can use the Fibonacci extended targets so that you meet your requirements of 1:3. So you can use this one if you do not get your minimum risk to reward on the minus 0.272. So this is how you use the Fibonacci tool. You measure the discount and the premium when you are in an uptrend. And then when you are in a downtrend, it's simply gonna be the same. You're going to mark, let's start over. You're going to mark from the swing high to the swing low. You're going to mark from the swing high to the swing low to get the information of the correction, and to get the target, you're going to mark from this high to this low, and then you're gonna get your target. And if you're enjoying the video, kindly hit the like button, subscribe so that you get notified when I make the next video. So let's go on the chart. I want to show you one of the trades which I took yesterday, which was a break even. So you can always learn from every trade you take, and I want to show you guys what I learned yesterday. So we can go on the replay mode and show you the structure. So this will also help you to see how to map the Fibonacci tool on your structure. So this was the zone I used to trade. So price was around here, So we can see that we're having this price action here, and then I had to map structure, and then I have to identify my inducement. You know that your inducement is the most recent valid pullback, which is this one. So you know that after taking the inducement, you can take a trade. So this will be our IDM. And then you also know that when you take the inducement, you will have a valid low. If we go on our left-hand side, we will be able to identify that this is a break of structure to the downside. So this is a valid break of structure because it has taken inducement. So this inducement level is not visible on the 1 hour, but when we go down on the lower time frame, you'll be able to see why it's inducement. So you know that when you take the inducement, you validate this low, and then when you break structure to the downside, you validate this high. Now you can use the Fibonacci tool to mark this high and this low, and then you're going to get the information of the correction. So this will be your golden zone, and then you want to take potential trades within the zone because price likes to reverse after tapping into this zone. That's why it's called the golden zone. So let's go down on the lower time frames. When we're on the 15 minutes, we can identify clearly that price has this level of order flow. So this aligns perfectly with structure here. We can see that this zone here is acting as support. If you mark like this will be your support level. So this zone here was acting as support. Now that it got broken to the downside, it's acting as resistance. Or you can simply mark the whole entire order flow. And then you know that on the retest of the order flow, you want to take a trade. So you can see that the order flow has been mitigated already, but we are having inducement above the order flow. And then above there, inside the order flow, we are having this unmitigated order block. So when you go down on the lower time frame, you are able to see the zones where price is most likely to react from. So this was the setup. This is the go-to setup. You know, after taking inducement, you look for a trade. So I'm gonna show you the trade on the screen, which was taken yesterday. And then I'm also gonna show you how to take the trade using the same rules. So this will be the structure. When we take the inducement, we're gonna have a valid low. And then in most times, you're gonna be waiting for price to meet your rules so that you can take a trade. So after taking the high, we validated this low. So I started looking for selling opportunities to come and take this low because this aligns perfectly with our downtrend. So you do not forget that this zone aligns perfectly with our golden zone. So to get the golden zone again, you mark from this high to this low, and then you see this is within the golden zone, and you know that price does not have to mitigate the order block. So with this information, it's easier for you to take the trade because you're not gonna be waiting for something which doesn't always happen. So price will not always mitigate your zone, but when it does, it's a good thing. But when it doesn't, you mustn't miss the trade. So after tapping or taking our inducement, I went down on the 5 minutes and waited for a confirmation. The confirmation is a single candle order block. I will leave the link to the single candle order block video in the description below. So if you want to check it out, you will learn some things from there. And then for you to get a single candle order block, you have to wait for a good candle. So this candle swapped to the high of this candle and also the liquidity. So this is a double sweep of liquidity. Let me quickly show you something. So if price didn't sweep the high again, if price simply went down, broke and closed below like this was gonna be my single candle order block. I was gonna wait for price to break and close below on the retest and take a trade to the downside. So if you get another sweep of liquidity to the upside, now you're gonna use this candle as a single candle order block. This one is much better compared to this one because it swept more liquidity and it closed below. So this one was a bullish candle. This one is a bearish candle and it's also a shooting star. So a shooting star, it's a selling candle. So it's signaling more selling pressure. So you can see that with the sweep of liquidity. So to use the single candle order block, you want the next candle to break and close below. On the retest, you can get involved in the trade. And that's what happened. After we had a break and close it below, you take the trade on the retest like that. On the retest, you take your trade, and then you can place the stop loss above the high like this. You can place the stop loss above the high like this. And then you can target this low. So you only need a minimum risk to reward of 1:3. So that means you can exit your profit. You don't even have to hold all the way to the zone like here. So you can exit your profit. This is your break-even area. When price takes this low, you need to go break even. And then you can exit your profit at 1:3 to get your minimum risk to reward like this. So I prefer holding all the way to complete the whole entire structure. So when you're in a downtrend, I prefer to follow the trend. So I'm anticipating price to keep dropping and go with the trend. So I had a break even yesterday because I held longer. And then this was the price. Let's see how it played out. You can see that the next candle tapped us into the zone. The next candle tapped us into the zone like that. And then you don't need to have tight stop loss like this. You can have a wide stop loss like this. It's totally fine. And then you let your trades to run. When you take this low, you go break even. So when you have rules to go break even, you're going to have more break evens than losses. So a break even is also a win. So be sure to protect your capital. And then you know that this is your change of character. So remember, when you're trading with single candle order block, you're not waiting for change of character. So this will be your change of character. When you get a change of character, that's when you go break even. This is also known as your order flow realignment. When you get change of character, you know that you can take the next trade as a confirmation, like this, to the downside. So that's your change of character, but you do not need to wait for the change of character. You can use the single candle order block. I will leave the link to the single candle order block video in the description below. So if you're enjoying the video, kindly hit the like button, as that helps with the creation of more free educational content. So this was the trade from yesterday. It was totally a break even, guys. And then what did I learn from this trade yesterday? When I got out on break even, that's when I noticed that we had this level of order flow right here. I didn't see it before the trade because I was focusing on sales only. And then I noticed that we had this order flow which got tapped into nicely, and price rejected to the upside. So we can also see that we had imbalance here, imbalance order flow, tap into the order flow, and a rejection to the upside. So I didn't see it. That's one thing which I learned yesterday. You can learn every day on the trades you take. So if you are enjoying these educational videos, I wanted to include that in the video so that you can see how price reacts to the zone. So price does not have to follow your strategy. Price does what it wants. So yesterday we got a break even, which is fine. And then based on how I showed you how to map, how to find your Fibonacci targets, you're going to mark from this low to this high to get your Fibonacci target. And then you can see that this will be your take profit. You have take profit 1 at 0, and then take profit 2 at the minus 0,272, and then you're gonna have take profit 3 at the minus 0,618. So price is most likely to reject the 0,272, but in some cases it does reach the target. So that's how you use the Fibonacci tool. If you enjoyed the video, kindly comment structure is king, as that helps with the creation of more free education. And if you wish to learn from me one-to-one mentorship, you can simply join our VIP through Patreon. You will get access to our Discord and lifetime signals. So that will be the end of the video, guys. I will see you in the next video. Signing out.